Hi, welcome to another question of the week. My name is Chris Niederhauser. This is Jason Wells. We're with the Wells Realty and Law Groups, and we're going to answer another question that we received from some visitors to our website. As always, you can ask questions in the comments below, or you can send us an email with a question that you'd like us to answer. Today, the question is, what are the tax consequences with a foreclosure, a short sale, or loan modification,
deed in lieu?
There's so many different things that are affected, or ways that the taxes can affect you after one of those things. But it's all related to mortgage debt.
Yeah, and the thing about this is people who don't do this properly can end up owing thousands, tens of thousands. We've even seen cases where a person could be involved hundreds of thousands of dollars to the IRS.
Right, and it's a really misunderstood area of law in Arizona, because
even among accountants, accountants who supposedly deal with this daily.
Yeah, and other attorneys.
Where the confusion comes from is the IRS and the tax code. They look at cancellation of debt as a taxable event. So if you have debt that's forgiven or it gets canceled, they take that amount of money and say, well, you got the debt canceled, but we're going to count that as income to you and we want you to pay taxes on it. Right. So in the case of a foreclosure, deed in lieu, short sale, these foreclosure alternatives, even a strategic walk away, what happens is the IRS could look at that deficiency between what the person owes and what the house was worth as canceled debt, in which case the IRS would want to tax it. The good thing is that in Arizona, most people are okay because we are an anti-deficiency state, meaning we're not going to get taxed on that money. In Arizona, if your loan qualifies for the anti-deficiency protection, then you get to walk away and you don't owe anything back to the bank. And if you don't owe anything back to the bank, you don't have to pay taxes on that money. Now, you'll hear a lot of things out there, and you'll probably read a lot of stuff on the internet, probably talk to a lot of realtors who are going to be telling you that by the end of 2013, that all goes away and you're going to have to pay taxes on all this stuff if you don't take care of it. It's just not the case. If you have professionals like ourselves or someone else who is well versed in this area of law and tax, most people are actually still going to be okay even after the Mortgage Forgiveness Debt Relief Act goes away. So,
well, what's the benefit of the Mortgage Forgiveness Debt Relief Act?
Good question, Chris. The Mortgage Forgiveness Debt Relief Act was put into place in 2007 as a law across the country for a moratorium on this cancellation of debt when it applies to a mortgage. So it applies to us in Arizona. I short sold my house in 2010. I just applied that law rather than work with the other ins and outs of the law to avoid it.
Really, just
I applied it to me.
It's less complicated.
Yeah, it makes it simpler. You do your short sale. I did my short sale, got through, didn't owe anything back to the bank. It was about $125,000 of debt relief.
Congratulations. You just made $120,000.
Yeah, that's what the bank says. And your tax bill on that, I mean, we're talking, $20,000, $30,000 for that kind of debt cancellation. But we didn't have to pay it because we're an anti-deficiency state, and we also had the additional benefit of the Mortgage Forgiveness Debt Relief Act. That thing's going away in 2013, the Mortgage Forgiveness Debt Relief Act, but we still have the anti-deficiency protections. So even if your short sale or foreclosure or deed in lieu or loan mod, etc., isn't done before the end of this year, you're still going to be in a place where you could be all right. It still comes back to whether or not you're protected by the anti-deficiency statute. So contact us. We'd love to talk about your situation. We offer a free consultation for you to discuss your situation as it pertains to tax, anti-deficiency, whether or not you should strategically walk away, how you can avert a foreclosure, etc. Just contact us on this page or give us a call.
Right, and even if you've already been through a short sale and you have those tax consequence questions, we're happy to answer those or help out in any way we can. We do what agents can't here at the Wells Realty and Law Groups, so let us know if you have any questions.